Imagine waking up in the morning, checking your phone, and seeing that your crypto portfolio has drastically grown. For some, it may seem like a dream, but it's entirely possible. The cryptocurrency market offers tremendous potential for earning money if you know what you're doing. In the next few minutes, we'll walk you through how you can make money trading crypto in just 90 days by mastering trading strategies, understanding market psychology, and leveraging technical analysis to make informed decisions. This isn't a get-rich-quick scheme, but a process of learning, adapting, and earning consistently. Welcome to 90 Days Better, the channel that focuses on self-improvement, finance, and smart investment strategies to help you level up your life. In today's video, we'll dive deep into crypto trading, a topic that's made headlines worldwide. Stick around, because we'll be revealing a not-so-common strategy that can change how you see the markets. Let's begin. So, why is trading crypto such a challenge for so many people? The truth is, many traders jump in without a solid strategy and end up making emotional decisions based on FOMO, using leverage incorrectly, or poor risk management. According to a study, over 80% of day traders quit within 2 years, often because they lack a structured approach to trading. But what if there's a way to develop a sustainable system to consistently profit in crypto markets? This is where a 90-day transformation plan comes into play, and we're about to show you exactly how it works. In the first week, your focus will be entirely on learning the foundations of crypto trading. Begin by choosing a reputable exchange. Binance, Coinbase, and Kraken are some of the most trusted platforms. If you're outside of the States, Bybit, BitGet, and Blowfin offer further opportunities. Signing up, completing KYC, and exploring the interface is just the start. You'll also need to research the basic concepts of cryptocurrency, including blockchain technology, altcoins, tokenomics, and how the market operates. This week will also be about setting up a paper trading account, simulating your trading without risking any actual money. It's a key part of building your strategy, especially as you get used to the volatile swings of the market. The goal here is simple: immerse yourself in the fundamentals without the pressure of losing money. As you enter weeks 2 to 4, it's time to transition from learning to developing your personal strategy. There are several proven approaches to consider. Swing trading involves holding assets for several days or weeks, capitalizing on price fluctuations. Swing traders focus on identifying entry and exit points using tools like moving averages and support and resistance levels. Day traders open and close positions within the same day. This strategy requires close attention to the market and quick reactions to price movements. When done correctly, it can be very profitable. Scalping is about making small profits over many trades, often within minutes. This strategy is ideal for people who thrive under pressure and have access to reliable, fast technology. Spend these weeks honing your preferred trading strategy. Start using technical indicators like relative strength index, Bollinger Bands, and Fibonacci retracements. These will help you identify patterns in price movements for specific entries and exits. Additionally, familiarize yourself with candlestick patterns like doji, hammer, and engulfing patterns that can provide insights into market direction. Always set stop losses to minimize potential risks. A stop loss will automatically sell your asset when it drops to a certain price, preventing bigger losses. Trading without one in place can be detrimental to your progress. By the second month, your trading strategy should be starting to take shape. But here's where many traders falter. They let their emotions control their decisions. Understanding market psychology is critical. The market often moves based on sentiment rather than logic. Greed, fear, and even news cycles play a significant role in price action. One popular saying is, "Buy the rumor, sell the news," which refers to the market often pricing in future events based on rumors rather than reality. At this point, it's crucial to develop emotional discipline. Stick to your trading plan and never make impulsive trades. Keep a trading journal to track your emotions and decisions after each trade. This will help you understand how emotions affect your choices and how to avoid mistakes. Studies show that traders who follow a disciplined approach to managing emotions have a higher long-term success rate. Avoiding overtrading and focusing on quality trade setups is key to sustainable profitability. Month 3 is when everything starts to come together. By now, you should have developed a strong understanding of how crypto markets move, honed your technical analysis skills, and learned how to manage your emotions. The goal of this last month is consistency, and now it's time to dive deeper into advanced technical analysis. Explore on-chain metrics such as whale movements, large transactions by major holders, and network activity to help identify broader trends in the market. Use platforms like Glassnode to acquire these insights. In this phase, you'll also begin to master risk management. Allocating only a percentage of your capital per trade and using position sizing techniques are crucial for longevity in the game. Remember, protecting your capital is just as important as growing it. Imagine looking back 3 months ago and seeing how far you've come. You started with zero knowledge about trading crypto markets and now have a strategy backed by technical analysis, emotional discipline, and a deep understanding of market psychology. At this point, you should be trading consistently and, more importantly, profitably. The confidence you've built will prepare you to take advantage of even more opportunities in volatile but lucrative crypto markets. Most traders focus on price charts and volume, but few know about time-based trading. This method leverages specific times of day when market liquidity and volatility spike due to global exchange overlap. For instance, the 1 to 2 hours after the London-New York overlap offers incredible opportunities due to high transaction volumes. By focusing not only on price patterns but also timing trades during these overlaps, traders can optimize entry and exit points with greater consistency. Many overlook this powerful factor. By following this 90-day plan, you've transformed from a complete beginner to someone with a real edge in crypto trading. You've developed a winning mindset, learned how to apply technical and psychological principles, and gained hands-on experience in one of the most exciting markets in the world. If you've made it this far, congratulations. You're now on the path to long-term success in the crypto markets. Stay disciplined, keep learning, and don't forget that consistency is key. If you found this video helpful, make sure to like, subscribe, and explore what our channel has to offer. 90 Days Better covers a variety of transformative habits to help you grow physically, mentally, and financially. Chances are you could be just one video away from changing your life for the better. Check the links in the description for tools and resources to help you in your crypto journey. And until next time, stay motivated and keep growing.